Hey, good afternoon. This is Andy, Atlas Forge. Today's educational presentation is about everything cyclical, and this might be one of the most valuable concepts for you to understand in the world of finance, money, investing, hedging, and all those types of good things. Everything is cyclical, from the amount of money you make, the amount of money that you spend, to the Dow, the NASDAQ, gold, silver, strategic metals, cars, appreciation, homes. Everything is cyclical, because you got to remember now, the current system that we transmit money, the fiat system, which is known as the SWIFT system, all of the hedge fund managers, the stock market, housing, everything has a long history of performance. And as data is collected, why, of course, you can start making some really aggressive assumptions about what's going to happen next. Let's just put it this way. It's proven very well for Nicole and I. Look at macroeconomics around the world. Everything is cyclical. And I'm going to get into a little bit of this right now. So with that said, let's get started. So everything is cyclical. And when we talk about metals, strategic metals, we can gain some insight on mining and production, supply and demand. So all of these resource markets are well established, and they're highly predictable in a pattern of extremes, ups and downs, periods of lows and highs. And it's very critical that you understand that essential raw materials, mining for ore and those types of things, most strategic metals are byproducts of mining. Whether it be coal or iron or what have you, most strategic metals are a byproduct of mining, whether that be for gold or silver. And it all works cyclically. And usually what happens is it starts out as research and development, it gets into some exploration, and all of these functions to actually go find the rare earths that certain companies and mining companies are looking for or are of short supply. You got to remember, the earth isn't getting any bigger. And of course, mining companies always pick the low-hanging fruit first, meaning the easiest raw materials to come out of the earth. They're going to go capture the ones that are easy to go obtain and bring to market quickly, inexpensively, because the further down you go, the more hassle it is, more environmentally conscious you must be in this day and age. It gets more and more expensive to mine. And all of these gold, silver, gallium, germanium, dysprosium oxide, rhenium, which are all strategic metals, why, of course, it becomes more and more expensive, because a lot of these metals, silver, for example, that's used in everything electronic, they're not recycled. And as far as I know, strategic metals are not recycled at all. So they're consumable, or they're consumed. And once that raw material is gone, that supply doesn't come back unless you mine. So really, resources that stay in production are depleted, and this causes shortages, which causes prices to go back up. And it's a very cyclical event. Just like you see inflation, you always see the Federal Reserve and the IMF and all these different central banks that are setting indices, or the Fed rate, in which they call it, in which they manipulate interest rates to either increase inflation or decrease inflation, with the hopes of either stimulating the economy or slowing an economy's growth down. And it's a very tricky business. It's very manipulated business. And very rarely do the powers that be in the world ever get it right. It's either way too much or not enough. And I find it ironic, years and years ago, decades ago, when, I wasn't making great money and I didn't have great credit. Well, to obtain a loan or get credit was impossible. Now that I've got good credit and I make great money and I have reserves, well, it's easy to get credit. So I find it ironic that people who need the money the most have the most difficulty in obtaining it. So everything is cyclical in such a way that all these new mines, and we're talking just about metals right now, oil fields, they have to be discovered. Research and development alone, just doing soil samples and core samples, and now they got satellite technology that can really pinpoint concentrations of different types of materials. It takes time for the supply to catch up with the demand. You're definitely going to see that in strategic metals right now, because we see the demand in all the electric vehicles, all the electronic devices that everybody's habitually addicted to. and there's only a certain number of supply, and those supplies in strategic metals, for example, are more rare than those of gold and silver. So you're going to see this cyclical event happen again where they're going to deplete the supply and the demand is going to skyrocket. So what that effect has is typically when you have very little supply and a huge demand, like we're going to see here over the next decade with the Internet of Things and all things electronic, it's a great position to be in. Remember, we always talk about invest from a position of strength. Well, that's exactly what I'm talking about. Cyclically right now, we know the demand for the next decade or two with electric vehicles and satellites and solar panels, because we've seen government mandates and we see these huge automobile facilities being built in Pacific Rim, namely China with Tesla. And then they have these super, what they call solar farms, where they have, I mean, literally tens of thousands of solar panels that just deplete these strategic metals. And it's a never-ending game. So by the time they go ahead and mine all these different types of materials, why, of course, they overmine and it becomes more expensive, always driving prices up. And then as the demand goes away, then there's too much supply. So it's a never-ending battle. Same thing with money. You know, we've printed what, $11 trillion in the last decade or so. The last administration just went crazy on a spending spree that put, well, pretty much the whole world went on a spending spree. These governments just printed money to try to stimulate the economy. And that, if you will, was the demand. There wasn't much activity. There wasn't much movement in money. There wasn't anything that increased GDPs. And so they flooded the market with money. Now there's way too much money out there, way too much cash on hand. So supply is crazily high, but the demand is low. So what you're going to see now is slowly but surely the Fed and those types of central bankers will start now manipulating the interest rates in an upward fashion, and it'll implode. And what happens is money will become very scarce. It'll be very difficult to get loans for new cars and houses and personal and business. And then it really shrinks the economy because there's no new entrepreneurs. There's no new businesses opening. So it's always a tricky game. And once you understand that everything's cyclical, you'll learn, based on our teachings here at Atlas Forge, of when and how to get into a market. And it's all about, you know, you always hear the saying, buy low and sell high. Well, here's a perfect example of right now, you should be buying low in strategic metals. They're the greatest value in an asset that I've seen right now. And then very shortly, as demand will increase, these prices should skyrocket. And then the process starts all over again. Same thing with mining. It's a very fickle, very precise art in which they try to manipulate things. If they would just encumbrance the people and let us be entrepreneurs, and if a business, you always hear too big to fail. Well, if they would just let them fail, we wouldn't have to continually prop them up with printing of money and bailing out. And now you're hearing bail-ins. Well, there's a difference. Inflation is an oversupply of money, meaning too much money. It devalues the current base of whatever currency that is, wherever you are in the world. So now, since we've printed all this money, interest rates have been at about zero. And as interest rates start to climb back up, which you're starting to see right now, the interest rates and the debt service on that money becomes impossible to maintain because a lot of people are living on free money, and you're going to feel the results of that. Same thing in mining. So what we look for now is hyperinflation, or even worse, deflation, where now money implodes. You can't just go buy a house on the stated income, or, you know, because you got 20% down, you can't just go get a loan anymore. Right now, money's free, but there's a cost to free money. And that's what we're going to experience over the next decade or two. That's how indebted we are. Same principles happen with mining. So everything is cyclical. And what we're looking at right now is a cyclical chart of income. To the left, you have your expected income, and to the bottom, left to right, is your age. You maximize your earnings at 53. When you start out as a young kid, let's call these kids now millennials, and you're out there starting your first job, maybe you're starting a family, you're consuming, you're borrowing, you borrowed money for your car, or maybe you got married and bought a house, you added, a child to your family. So you increased a lot of debt. You can see here, debt between age 20, 30, and really all the way up to about 50, you incur a lot of debt as you start a family and those types of things. Very little investment going on, because remember, 20 and 30-year-olds are millennials right now, and statistics show that millennials are the worst savers on the planet. So when we look at income, your expenditures as you start out in life in those first 20 years or so, 20, 30 years, 20 to 50, age 20 to 50, you have a lot of expenses. I mean, you have colleges, you have kids and clothes and toys and all of those different things. It's very difficult to save money. But as the kids grow a little bit older and the family develops and they go out and get a job or they finish up college, the parents no longer have that expenditure of kids and college. And so you maximize your earnings at age 53 on average. Not everybody, but age 53. And ironically enough, I just happen to be 53 and I'm making more money than I ever had at age 53. Now, I've been in financial arenas for most of my working life, and I can say right now, my experience with being an entrepreneur, I wish that somebody would have shared it with me many, many years before I got involved with really being my own bank, being my own boss, being an entrepreneur, allowing myself to move in and out of positions where I own, maintain, and controlled my own money. So stage one is really building wealth. But with that wealth, you have a lot of debt. And the wealth that we speak of is really 401ks, company-sponsored 401ks. Maybe you've built some equity over the decade of your first new house. But even that, nothing's guaranteed. So when we look at cyclical events, this wave that you see and this pattern that you see, just like anything, it ramps up. The left side is debt, and then really the right side is retirement. Hopefully you've done the prudent things and you've hedged and protected and invest wisely so you can remain living your golden years on what you've saved. So stage three is living on saved wealth through retirement. But there is a unique problem right now with this income cycle. The baby boomers that are of retirement age right now, who maybe did dollar cost averaging, maybe lived a prudent life, maybe did saved across their life. Well, all of these pensions, if you're a state worker, if you're a teacher, if you're somebody that is a federal employee, a state employee, a city employee, all of these participations in these 401ks and matching incentives that the employers do, why, of course, these monies are all in one category of an investment. And right now, that investment, meaning the stock market, is the riskiest investment that I see on the planet right now. Why? Because everybody's in debt, number one. The government, states, these pension funds that in Social Security, these vehicles that you're relying on to retire, stage three, living on saved wealth, well, they were based on a pro forma that returned 7.5%. Now, they're nowhere close to performing as advertised, as promised. In all actuality, when you look at baby boomers and their 401ks, well, the average return on these paper assets are anywhere from 0.5% to a max of 3% if you're lucky. And that goes for social programs. So the monies that you're looking for that are being provided as you retire are not going to be what's been promised. And you can bet as governments get more desperate, and they are very desperate, and you're starting to see it all around the world where the governments are coming in and literally stealing and snatching these people's retirement funds or reducing the value. And that's just horrible, because what's going to happen is people are living longer, and it's either going to force the baby boomers back to work, or they're going to have to lower their standard of living. Because remember, the average retiree at 65 or 70 and a half, whatever you want to look at, it's only $1,500. And those are for the people that prudently saved over a long period of time. Well, I'll be honest, Social Security and $1,500 a month is not a whole lot, because that's a fixed amount. That's got to last you 20 or 30 years at $1,500 a month. You can't live on $1,500 a month. That barely pays in your housing expense, no less your insurance and pharmaceuticals and if your insurance and taxes and fees, because you're on a fixed income. The price of goods and services are soaring. So it's going to be very, very difficult if you don't have a plan B or have other investments that are helping supplement any social program or 401k that you might be involved with, because it's not going to be there. So income cycle, the way we invest and the way that we retire has drastically changed, because you got to remember, during the baby boomer era, you had millions more participants in that social program than what you have now. It was like 75 to 1, meaning 75 people paid into social programs during baby boomers. Now, fast forward 21st century, here we are in 2018, and the millennials, the participation, because the population has dropped significantly, there's only 3 to 1 ratio, meaning only 3 people are participating in the social programs, where at one time it was 75. So this great big expectation that was set that, work hard, buy a house, save over the long haul, dollar cost averaging, and then you're going to rely on your government or your employer to take care of you during your golden years are a thing of the past. It simply, costs have just skyrocketed while the average worker's wage is the same as it was in 1980 after adjusting for inflation. So there's some huge problems on the horizon in paper assets. So just be very aware of everything is cyclical. Inflation cycles. This is what we're in right now, an inflation cycle. We have had relatively low inflation over the last 2 decades. And you don't see it, but it's there. It's if you go to Atlas Forge, I wrote a paper it's solely about inflation and how it works. But early inflation typically works like this. You have credit, in essence, free money. Anybody can get credit, and free money. The only way central banks are profitable is if they expand the monetary supply. Remember back in, I don't know, it was probably a decade ago, where the government bailed out Fannie Mae, Freddie Mac, the car industry, meaning the 2 largest entities that increased the monetary supply or increased the currency are done through loans. That's done through housing loans and car loans. So it's not a big mystery. Why did the central banks bail out certain companies, but they let other companies fall by the wayside? Well, the answer to that is, without increasing monetary supply, the Ponzi scheme we know as the Federal Reserve and the fiat system comes to a halt. Because if there's no new money and expansion, they can't pay the people that got in originally. So right now, you're seeing all-time profits on Wall Street. And why don't we see inflation right now? We don't see inflation because the money, or here in the States, and the money in most countries never got to the end user, never got to you and I. It didn't expand businesses or innovations or stimulate growth or increase employment. All that money went to was to the same old, same old. They bailed out the companies that had the most value to them. And that was the car industry and the housing industry and the banking industry. All that money went right to the central banks, and then their buddies in Wall Street, they went and bailed out the people in Wall Street. So we spent $11 trillion, and we, the people, didn't get anything out of it. But they bailed out the people that would secure the Ponzi scheme, secure their profitability for the central banks in the future. So this is where we're between early and mid right now. We have huge growth on Wall Street. We have huge credit growth, and we know that because we've got huge debt. People are living month to month on credit. You're seeing huge profits on Wall Street. You're seeing all-time highs in Wall Street. This is because we introduced $11 trillion into the ecosystem. Of course, we're going to have all-time high stock market. And how do we know that? How do we really know that the stock market's at its highest price to earnings ratio because we see Fortune 500 companies buying their own stock. They buy it back to produce a dividend for the average investor. That's bad money chasing bad money. That's not growth at all. So we're seeing inventories, sale growth. We are at that equilibrium. We are somewhere between mid and late inflation cycle. So to answer the question, why didn't we see prices in the grocery store skyrocket? Because they're not done manipulating it yet. Take a bag of chips. It still says 16 ounces, or it did. Now it says 12 ounces. They didn't raise the price. They reduced the content in the bag. The bag stayed the same size to deceive you in thinking that you're getting the same amount of potato chips, but in essence, you didn't. You got 25% less. Went from 16 ounces down to 12 ounces. So these are subtle, hidden ways that inflation just eats you to death, meaning your money doesn't go nearly as far as it did 10 years ago. Actually, it's worse. So that's why you don't see these ultra high prices all over in the grocery stores and these types of places, because the money never got there. That's why you're seeing a very exciting, powerful stock market. It's at an all-time high. Everything's great. And that's what they want you to believe. If I was a government and I wanted the masses of people to feel secure and give this euphoric feeling that everything's all right, how do you do that? You do it through money. And you do that through money through Wall Street that shows all-time highs that, hey, guys, everything's all right. And it's at the Nikkei, it's at the Shanghai, it's all of these countries are repeating the model. And it's a terrible model that the US has created or imagined or magically. It's all bogus, guys. If I could tell you one thing, just like I told all the Bitcoin people a year ago, take some profit off the top. I strongly recommend, if you're fully engaged in paper assets, take some profits while you can, because once that bear jumps out the window, you're not going to have control. And how do I know that? I was live selling financial vehicles in 2008. And that September period, that 3-week period when the melt-off began and the sell-off began, you didn't control your money. You couldn't sell something if you wanted to. And then you're seeing spurts of this all around the world, where countries are going bankrupt. You can't have access to your currency, your investments. You're literally held hostage of whatever country and whatever hyperinflation that goes on at the time. So inflation's it's a cycle as well. And it's manipulated by the same folks that manipulate the currency. Right now, we've got the trifecta of scary things. We've got the highest debt in history with the lowest interest rates in history. Something's got to give. Here's how desperate it is. 10 years ago in 2008, we were about 4 hours away from a full-blown bankruptcy of the US dollar. Fast forward 10 years, okay, we averted the crisis at the time of 2008. It cost us $11 trillion to bail our failed policies and fiscal responsibility. Now we're 2018, 10 years later. The banks have less reserves than they did in 2008. They have more toxic loans that have been bundled up into derivatives and securities. We've got 30 central banks around the world that pay negative interest rate, meaning you're paying the bank to deposit your money into their system. Then they take your money and they make highly risky loans. And when they default, they get bailed out by the government. Who protects you? Nobody. That's why it's imperative that you get out of debt, not have all your eggs in one basket. Why it's imperative that you have an additional income stream. Why it's imperative that you have assets abroad that are not seizable by any government. Because look, going around India, Argentina, Spain, Greece, Iceland, I could go on and on and on. They're literally taking money from people. And that's serious stuff. You cannot continue to go down through the path of life with your head buried in the sand. And if you are, then you have nobody to really blame but yourself. I mean, you got to get engaged. It's the number one thing in your life that's going to dictate your standard of life, your quality of life, and that's money. So as you can see, inflation cycle, cyclical, goes up and down. I'm 53, and in those 53 years, there's not been a 15-year period that has come or gone. And when I talk about cyclical, I'm talking about war, major disruptions and crashes on the stock market, bubbles, real estate, everything is cyclical. And I hope you understand that. In my lifetime, I've seen these things happen, several wars, several crashes. It crashed in 2000, what was it, 19, after the dot-com boom, the 2008 bailout. And right now, today, economically, the world is in more debt with less reserves, with less growth than 10 years ago. If you think it was bad in 2008, you haven't seen anything yet. Now, how are they going to avert this next attack? And it's imminent. I mean, I used to be in the military. They used to say brace for shock. Well, by God, it's here. I mean, it could happen tomorrow. I'm not selling fear, guys. This is basic macroeconomic. You need to understand this. We are going to hit a recession like the world's never seen because it's a worldwide thing. As the dollar goes, so goes the world. Now, what creative ways will they bail themselves out at our taxpayer expense? I don't know. All the ammunition and weapons that they used to fight off crashes and terrible economic policies, they don't have those weapons right now. They can't print any more money. They can't lower interest rates anymore. What are they going to do? Well, I can tell you what they're going to do. They're going to find ways to, well, for sure, no matter what, your taxes, I guarantee you, are going to skyrocket over the next decade. Your 401ks, your social programs are going to be drastically reduced. Drastically reduced. Everything is cyclical. And here's a beautiful slide we put together. As you start out, and I'll show you the next slide just so you know what I'm talking about. As you know, this is a great depiction of Bitcoin and what's going on with Bitcoin right now. Now, I love Bitcoin. I believe in Bitcoin for so many reasons. I won't get into them on this call, but it's about freedom. It's about we, the people, finally having a money that we own, maintain, and control, that we don't need approval from a third party. Bitcoin, and it's autonomous, proves that a currency, or I guess I should define it, a money can survive outside of central banks. Now, just like any new payment system, if you look at them over the years, everything's cyclical. It starts out at R&D. You have the startup companies, the first round of venture capitals. So, back in 2009 when Bitcoin was started out, it started out as a gaming vehicle to, give credits back and forth through gaming. And then they applied it to, okay, this could be a way for us to transact monies and transmittal of monies around the world at a reduced cost, where we don't have to ask the governments. We're not being policed or controlled. But with that freedom comes responsibility. You're not tethered to anything. If you're into cryptocurrencies and Bitcoin, which, we got in right at about the R&D stage several years ago, and we did quite well. But anybody that's followed me, a year ago, I said, take some money off the top when it was about 15,000. Now it peaked up to 20,000, but I would rather leave, 20% on the table and capture 75% of my profit, because look at what's happened now. This wave, just like you see, first generation products, high price, lots of customization needed, early adopters. So this is the inception of the white paper, cryptocurrency, how it works, what its value was, and there was early adopters. Through our teaching, we've made hundreds of people millionaires. That's just fact about the matter. People who follow our teachings and our educations at Atlas Forge, we've made very, very wealthy. Now, some of those people, here we are today, Bitcoin, it lost 82% of its value over the last year. Those that were what they call hodlers, hold on for dear life, are not singing a nice tune right now because they got greedy. And with any new invention, and especially money that I'm talking about right now, is too few people own too many Bitcoin. So we had a great idea. We're implementing the idea. We had early adopters. And then, what was it? January of 2017, the mass media, all the hype. You couldn't turn on a TV, a radio, a computer without hearing about cryptocurrency and it's skyrocketing. And they compared it to the tulip rush back in, 1750, which is total nonsense. Tulips and money are too so far apart. And we're talking about a worldwide fundamental change, not some flowers in one country. It's a ridiculous comparison, but nevertheless, everything is cyclical. It's going to have the inception, the idea, it's going to catch on, it's going to get some momentum, it's going to gain some publicity. And here it got totally blown up, hyped up, mass media, and then it peaked. And just like you saw Bitcoin, what was it? Right here. It hit the peak. We were selling here. I don't care what investment it is. If it goes up too fast, take your profits and get the hell out. Guys, I look at investing like gambling. I really do. First of all, you got to know the rules. I can't tell you how many times I've walked through a casino, and I don't gamble, but I know all the rules. I know all the percentages of every game in the place. That's why I don't gamble. But I sit and I watch people gamble. Some people can afford it, but most people that are in there can't. And they go in there with their monthly paycheck. They don't know the rules. They don't know the odds, and they don't know how to bet. And I apply this really to investing. If you know the rules, that's the first objective. You can't just blindly throw your money into something on faith alone, because the world's full of shady characters. You don't know what's true. You don't know what's not true. You've got to be part of a community, or like Atlas Forge, where we collaborate and we have chat rooms and constant communication going on from around the world. So when I look at gambling and I see people, they're betting money, they're spinning the wheel, and they think they're going to get rich. And even the ones that are winning, they could win for hours and hours and hours and be up 10 times what they originally started with. And very, very small percentage of any of those people walk out of the casino profitable. Why is that? Because they think that they're going to just continue to win and win and win. They're breaking the odds. They're killing the odds. Guys, the whole key to investing, the whole key to life, if you will, you cannot be greedy. Take what God's given you, be happy, be humble, and move on down the road. Am I saying you have to pull all your money out? No. I'm saying take your initial capitalization out, cover what your expenditures were that you got into initially, and then no matter what happens, at worst, you've broken even. But so many gamblers, they get euphoric. That's why there's all the sparkly lights and all the hype and all the nonsense. Stay away from that. Use your head. Nothing goes up indefinitely. Everything that goes up, you've heard the old saying, sooner or later is going to come down. And when it comes down a lot faster than when it went up. You've heard the old analogy all the time. The bull walks up the stairs, but the bear jumps out the window. And you might not know what that means. That means that slowly but surely, and as you can see in this figure, it almost looks like a stair step. These first couple of steps here, say step 1, 2, 3, 4, 5, and then the big step up to 6. You got 6 huge, and you can probably add 7, 8, 9, 10. Slowly but surely, this thing stepped up. And this took from 2013 to 2017. And then look what happens. The bear jumps out the window. Look how fast from this point here, 1 year, it dropped 82%. It took damn near 10 years, bull walking up the steps. And then the bear jumps out the window. So all this excitement, all of this hype, guys, you got to think about what you're doing. Step 1, take back your initial capitalization. Step 2, take some profit, diversify. Step 3, you've got to have a point in which you maybe here and you came back up and said, okay, but by definitely this point, the majority of your holdings should have been out the window and you should have taken your profits. Now, and everybody's going to say, oh, well, Andy, it's easy to say that. No, go back to my teachings and look at what we put out a year ago. It's documented. This isn't the first time I've been down this road. It's great. It's exciting. I get it. But where are we now? So now we're the negative press. We've had the negative press. Matter of fact, I saw it yesterday on Fox. Second, third rounds of venture capital funding. And that's about where we are right here. Less than 5% of the potential audience has adopted it fully. Do these charts look pretty similar? Absolutely. I didn't know when it would happen, but it happens with every financial vehicle I've ever seen, without exception. Now, if you're still holding at this point, down 82% later, hey, what the heck? You might as well ride it out. because now is probably the time to buy Bitcoin and altcoins. Why do I say that? Because during this period, too many people own way too much Bitcoin. When any group owns the majority of any set asset, they have the power to I won't say manipulate, but to influence the price. And that's exactly what you're seeing right now. All of these people that were mining Bitcoin for years, right and through here, the Chinese, number one, Chinese made a killing. I'm guessing tens of thousands of Chinese made millions upon millions of dollars because they were the miners. They controlled the mining, and you can just track it. So now where are we? We're at a very low Bitcoin price. I think today it's right in and around, it came back about 10% from a horrible week of dropping, I don't know, 30% or whatever it was. Here's a good rule of thumb. If you're looking at an investment 2 or 3, 4 times a day, that should tell you something. Either A, it's going up and you're being greedy and you're all happy and everything's good. But if it's going down and you're checking it 3 or 4 times or every hour, then you have too much money in that asset. I don't look at Bitcoin every day. I bought Bitcoin because it's another asset. It's deemed real property. It gives me another spoke on the wheel. It's another asset that I own, maintain, and control. So where are we right now? Less than 5% of the potential audience adopted fully. That's where we are right now with Bitcoin. The problem with Bitcoin right now is, let's do some quick math. There's $4.3 trillion a day that's moved. And if you look at the market cap on Bitcoin or the daily volume on Bitcoin, we're 0.5% market penetration, meaning of the $4.3 trillion that's moved on a daily basis, we're insignificant. We have no market penetration. We have no monetary velocity, meaning nobody's using it. Everybody's speculating. Everybody's buying it and thinking they're going to win the lottery. And all the people that got in, in this point on these top caps here, because they believed in the hype, now they've lost 90% of their investment. So they're not using it. They're holding on for dear life. And probably the most of them just said, I'm going to take what little bit of money I can and just get out now. That happened with Visa. That happened with MasterCard, Diners Club. Well, back in 1930, the US dollar. These are all new vehicles of money, and they're going to be very volatile. Every day that new people come into the ecosystem or into the crypto space, it reduces the control of these people that own the majority of them. Because as they start taking profits and get in and out of the market, they're the same people. When you look at volume of cryptocurrency, it's the same people moving the same money around. It's not necessarily new money that comes in. When you look at altcoins, you're always going to have the leader of the pack. And in this case, it was Bitcoin. But now we've got 6,000 other cryptocurrencies. The market is oversaturated with so damn many cryptocurrencies, it's like devaluing crypto. Think of it this way. Let's say there's $200 billion that are moved. And 2 billion of it goes to Bitcoin, and then 98 billion of it goes to altcoins. And that's what you're seeing right here. Second generation products and some services. So we had Bitcoin that has the rise and fall of the great Bitcoin. And now we're into, okay, what's the utility? What's the use of this Bitcoin? How are merchants going to accept it? Merchants don't accept it because it's too volatile. Remember, too many people own too much. But every day that a new person comes in, a new company, Fortune 500, an ETF, a banking system, a whatever it might be. And there's some huge companies behind this that are going to use blockchain and cryptocurrencies. But that's where we are. We're in the second generation right now, the trough of disillusionment. That's exactly where we are. You couldn't draw it up any better than where we are. So now at $4,000, could it go lower? Absolutely. Could it go higher? Absolutely. What's going to dictate the value of Bitcoin moving forward? Some of it's going to be laws and regulations and controls and encumbrances by governments until they figure out what they're doing, because right now they're quite honestly, most countries around the world are clueless on how to maintain it, control it, track it, tax it. And it's just crazy. So second generation, when I look at second generation, to me, that says altcoin. Altcoins were all about doing it better, faster, more utility, higher scalability, quicker, faster, less expensive. Some do that. And there's some great coins that I'm going to recommend for this next year. You're going to have to subscribe to Atlas Ford. This is information I'm not just going to give away. It's going to be for our paid membership. And these are coins that are adopting or have utility, meaning they've got millions of people on what they're currently doing that are now going to use a token or a cryptocurrency to facilitate that movement of money within these organizations. And there's some huge names. There's a lot of money behind cryptocurrency. Now, ultimately, does it succeed or does it fail? All really depends on you and I. Now, it's about getting people educated. It's about methodologies. It's about best policies and developing good practices. It's about usage. Right now, if I'm a merchant, I'm not going to accept cryptocurrency. We do it, or at Atlas Ford, sure we do, because I believe in it. But could it go south? Absolutely. You're talking about money. And money is one of those things that are controlled by the powers that be, that there's always something in the back of my mind that always says, well, geez, this is money. Understand, countries go to war over money and control of money and assets. And this is no different. It's just a little bit different beast that's much harder to control than other types of monies. So here we are, we're trying to find utility. We're trying to make it easier. And the coins that are going to succeed are the ones that find a way that make it easy, usable, and have a true defined value and benefit to the end user. And that's where we are. We're in these third generation products. High growth adoption phase. 20 to 30% of the potential audience has adopted the innovation. This is mass acceptance. So yes, we're here. We could go to there, yes, but I look at how powerful this blockchain is of absolutely changing the world. I believe it's one of the best inventions since the inception of mankind. That's how great it is. You probably don't understand it yet, but that's part of what we're going to do here in the next month or two, is really explain cryptocurrency in a layman's view. You don't have to have a degree from MIT I'll put it in such a way that makes it very easy to understand. But everything is cyclical, guys. As this goes up, and it came right back down. Now, this cyclical event was predicted. It was exactly what I thought would happen to it. And now the interesting part is which cryptocurrencies to keep, which ones to get rid of or convert into others, because I'm going to say 95, maybe 98% of all cryptocurrencies that are here today won't be here 5 or 10 years from now. And maybe the number one cryptocurrency hasn't even been developed yet. You got to remember epiphanies and enlightenment. Think of all the things that have happened over the years, from technology to communication to farming equipment, the Industrial Revolution, the car, the steam engine, the internet. These things were massively disruptive and improved the quality of life. Blockchain, which is really the platform in which all cryptocurrencies operate on, is no different. The only difference is this is money. So as this rolls out, Bitcoin's going to go either up, and there's going to be some things that drive it up: ease of use, utility, mass adoption. Maybe the powers that be will finally leave Bitcoin alone and allow ETFs and investment, unfortunately, Wall Street, to start selling these, because Wall Street will be very indicative of the price. Don't get me wrong. But with that said, it's kind of like having a cryptocurrency backed by gold. One of the greatest values of cryptocurrency is there's some decentralization and anonymity to it. Once you back up by gold, you really reduce the effectiveness of Bitcoin. So I'm not a big advocate of taking the oldest money in the world and backing the newest money in the world. One is a hedge, one is an insurable. And on the other side of the spectrum, Bitcoin is highly speculative, highly volatile. I see no value in coagulating the two. It takes away from the value of gold. Now they sell you on the premise of buy this cryptocurrency, it's backed by gold. Well, what percentage is backed? How do you get your gold if the cryptocurrency crashes? If the cryptocurrency crashes, does that mean your gold's worthless? I mean, where's your gold? Was it essayed? Is it in your name? Do you own it? How do you get it? I mean, the questions are endless. You don't control anything. So I'm not a big advocate of cryptocurrencies backed by gold. So that's enough of, I spent too long on this, but I wanted to show you the depiction of cyclical events and how they happen. On the rise, at the peak, trough, climbing back up the slope, and then entering the plateau where it's going to find that equilibrium. Could be much higher, could be slightly lower. But remember, the principles in which you buy these assets are based on some fundamental ideas: safety, ownership, maintaining, controlling, having diversification, assets abroad, assets on the internet, because we don't know what's going to happen. We don't know where the capital flight, when the crash of the stock market happens, where it's going to go. Is it going to go back into gold and silver? The last crash that happened about 2 weeks ago says that a lot of it's going to go back into gold and silver. So when you hedge with gold and silver, you're hedging again. It's shock absorbers. That's what diversification is all about. Having a hard-boiled egg, having an over-easy egg, having some scrambled eggs, having an egg. You can't have all your eggs in the same basket. See, when everybody was crying and complaining the stock market's crashing, I'm loving it because my gold and my silver went up. When Bitcoin was crashing over this last year or so, didn't affect me at all. I already took my profit out. I already got my initial capitalization back and diversified into other products. That's the key to the game, because in this arena, we don't have the ability to make the rules. We have to adhere by certain rules and regulations, and they can change the rules in the middle of the game. They can take their ball and their bat and they go home, and you're left standing there on the pitcher's mound. Debt bubbles. Guys, this is the whole reason why you diversify. The main reason why I have gold and silver is to hedge against this kind of nonsense. And this is margin debt relative to GDP. And you're saying, okay, what's all that mean? Guys, look at what happened right here, 2099. Guess what happened right there? That was the stock market crashing after the dot-com bubble. Okay. Fast forward about every 10 years or so it happens. So here we are. Guess what happened here? 2007, 2008. That was the crash of 2008. What did we have here? Low interest rates, high debt. What do we have here? Low interest rate, high debt. So fast forward, where are we right now? We've got like a quadruple top, meaning we printed more money from December 2008 to present day than the world has ever seen. There's been more money printed, and we're more in debt. In 10 years, we accumulated more debt the entire world has ever had in debt in history combined. I cannot stress to you enough that this crash, it could be the granddaddy of them all. And I'm not doing that to sell services or our products. I'm doing this for a much greater, expansive reasons than you could ever imagine why I'm doing this. We have friends, we have family, there's people around the world. We know literally hundreds of thousands of people that we're trying to help and protect. I could have just as easily retired and be sitting on a beach somewhere in Bora Bora. But guys, look at what's going on here. These highs, and if you were with us last week, I showed you exactly what happens when these all-time highs reach. Why in God's name would you pay the highest ever for a stock, knowing that the governments are already so far in debt? It's highly risky. The highest ever in history. Margin to debt relative to GDP. It is one of the most vital key indicators that you'll ever have in your life. And if you're a millennial listening to this, all that you have to do is understand this one chart. And if you invest accordingly, you'll live a very happy financial life. Everything is cyclical. Not only is it cyclical, but there's a reciprocal, meaning when these highs are reached every single time, when this crashes, guess what happens? Gold, silver, that's why they're called a hedge. That's why it's imperative that you have to have these things. Now, greatest numbers in history. I haven't seen the numbers for 2008 yet, or 2018, but I'm going to guess they're right at about 2.92, 2.93, maybe even 2.95. The highest in history. Bubbles. This is how they manipulate things. Inflation is nothing more than a fancy word for tax, plain and simple. All this money that's been printed around the world, guess where it's gone? You don't have to look. Look at the money. That's where the money is. Went to the stock market. Stock market's nonsense. It's overvalued drastically. The highest in history ever. Take your profits. Best advice I can give you. Here we go again. Debt S&P. Now this is present day dollars. Dot-com boom, housing bubble, post 2009 bubble. Do you see what's happening here, guys? We printed so much money, and that's what you see from right here, 2008. We're trying to stimulate the economy. That's what they say. You hear all these elected people say around the world, go shopping, go spend some money, go buy something, go in debt, save the economy. Guys, that doesn't save anything. That just puts you in debt, and nobody's going to bail you out. You're not a central bank. You're not an owner of an automobile company. You're not Ford or Toyota or Tesla. You're not getting tax reductions or incentives to bring your manufacturing plant to your hometown, USA or Europe or China, wherever you're at. No, they don't care about you. You have to care about you. Nobody's going to do it for you. You're a living, breathing tax entity. Nothing more, nothing less when it comes to money. And the sooner you figure that out, the better off you're going to be. And this is proof. I mean, I'm not making this stuff up. I couldn't make this stuff up. It's all right there. As I always say, a bull runs up the steps and a bear jumps out the window. Guys, percentage of U.S. adults invested in the stock market, and these numbers are, whether it's the Shanghai, whether it's the Nikkei, whether all these exchanges show the exact same numbers. Selected trends closest to April for each year, Gallup poll, blah, blah, blah. So these are the years. These are baby boomers retiring. Remember, baby boomers make up 85% of the stock market. So let me pose a question to you. If the baby boomers are 85% that make up the stock market, and they're dying at 10,000 people a day and being replaced from income sources as millennials, who are the worst savers, how is it possible that the stock market has hit all-time highs? If 85% of the major investors are dying, baby boomers, how in God's name is the stock market at an all-time high? Well, all we have to do is go back a couple of slides, and this money printing is exactly why you have the highest stock market values in history. Highest price to earnings. So let me break it down to you in layman's. Let's say you want to invest in smartphones or Apple or Samsung. You're going to pay the absolute highest price for that stock ever. Why would you do that? Knowing that the stock market is supported by the government, it's all funny money. There's a difference. Funny money wasn't earned or worked for or achieved or acquired. It was printed out of thin air, given to the buddies at the central bank, passed on to Wall Street to make everything look great. Guys, we got negative bonds that are coming due next year, midterm, the end of the second quarter. The worst performing bonds, negative interest. We've got central banks. We've got the highest debt with the lowest interest rate in history, highest credit card debt, student loan debt. Guys, I'm beside myself. I don't know what to say any more abruptly or any more clearly than what I've said is, boy, oh boy, hold on, because it's going to be a wicked decade or two financially. It will change the lives of just about everybody on the planet. And things are going to get real interesting, and not in a good way. So it's imperative that you take the time now to educate, prepare, to hedge, and have some go to hell money, because that's where we're going in wicked quick fashion. And it's just proof of it. People that make up the stock market are getting out of the stock market because they're old and they're retiring. You know, here in the States, there's something called mandatory distribution. Once you reach a certain age, it's mandatory that you start taking money out of the stock market. So if 85% of the people that are making up the stock market are forced to take money out, how in God's name is it hitting an all-time high? I'll tell you, funny money. It's manipulated. So everything is cyclical. Baby boomers make up, oh, I was wrong, 82%, not 85, my bad. So baby boomers dying at 10,000 people a day. Millennials now exceed baby boomers in population. Now, here's a critical thought that some of you, and this will happen around the world, no matter what country you live in, but you're going to start seeing politicians that will adhere or cater to the millennials, because millennials now outnumber baby boomers. So what does that mean? Meaning you have a demographic that is the populace, meaning they have the most weight in voting. So any elected official is going to look at this demographic and say, what can we do to help the millennials? In essence, buy the vote. Very similar to what the last administration did here in the United States. So how are they going to cater to these millennials? Now that they're the #1 voting force, what could they do to help the millennials out? The millennials are also the demographic that have the highest student loan debt, $1.5 trillion. I can see somewhere in the next year and a half, as we start ramping up for more political nonsense and bickering and fighting, and why can't everybody just get along? We correct the problems, which are very, very risky financial policies, and constant fighting, whether it be religiously, personally, macroeconomically, culturally. It all comes down to money and the haves and the have-nots. And you're going to see elected officials around the world that are going to look at these demographics, and maybe they absolve debt. Maybe they say, okay, in return for your vote, we will just do away with student loan debt. Now, if I had $100,000 in student loan debt, and there was an elected official that was running for presidency or Congress or whatever it is in your part of the world, what are the odds of me voting for the guy that just eliminated $100,000 worth of my debt? Pretty damn good. So you're going to see more social programs. You're going to see more. I've read and I follow these things, and because I have to, these social programs that are going to be expanded, and not just in the United States, where they're really considering paying people to do nothing. They're going to pay people for non-participation. It's the most ridiculous thing. So all of us hardworking people that are out there trying to make a buck, guess what's going to happen? Just like healthcare here in the United States. You know, I started out with great healthcare, loved my doctor at a premium I could afford. But now that we went to socialized medicine, why, of course, my doctor changed, my premiums exploded, and I don't even have the doctor I want. This is what happens when you have socialism. And I'm not going to get into any politics and all that, but this is macroeconomic, financially speaking, the burden that's going to be put on the middle class for all these social programs will destroy the middle class. Think about it. But guys, understand what's going on around you. Understand it for your kids and your grandkids, because it's going to be a completely different world that they're going to grow up in. And maybe we'll do that on a whole nother show. But as far as money goes, all that I can tell you is, macroeconomically speaking, from a worldwide perspective, there is no greater fear than right now. It's a little bit of salt and pepper. It's a little bit of bullion. It's a little bit of chicken stock. It's a culmination of a lot of very dangerous things that are going on. Trade wars, religious wars, racial wars, civic wars, social unrest. All of these things play a part in the quality of life, your standard of living. And most people say, oh, I don't have nothing. Oh, the United States is strong. Nothing's going to happen to the stock market or the dollar, and blah, blah, blah. Well, that sounds great, and nobody worries about it until that's not the case anymore, because then it's usually too late. Here's the whole strategy and principle that you need to understand. By accumulating wealth and assets, that gold, silver, strategic metals, diamonds, whiskey, I don't care what the asset is. You cannot have all your money in one basket, in one country, under one regulatory authority, or you're going to get stuck, and stuck in a place that you're not going to like. Let's assume that I'm wrong. What harm has been done? None. You still own, maintain, and control every asset class that we've talked about. So whether it's cryptocurrency, gold, silver, I am 100% out of paper assets completely. I own none at all. other than what's in maybe a local bank account. And the fiat monies that we do have, we bank in Singapore. Why? Because Singapore pays an interest. I earn money on my money. I love that. They're not insolvent. They're not bankrupt. They're not toxic. They're good, sound principles. They have reserves that are 20 times what the Western banks have. So even though I have to deal in these fiat currencies to run businesses and those types of things, I went out and I sought the most safe banks in the world. Hong Kong, Singapore. I can show you how to do that. That's what Atlas Forward was created about. We can show you how to vault, how to buy good gold, high quality silver. That's money, not currency, that you own, maintain, and control, that can't be seized. These are all things you need to, well, seriously consider sooner than later. So with that said, thanks for joining us today. I had a great time today. I know I went over. I was feeling energized to get this information out. Thanks for tuning in. Go to Atlas Forge. Go ahead and get your yearly subscription. This is Andy, CEO of Atlas Forge. Have a great day, guys.